Rebecca Fannin is the founder of Silicon Dragon Ventures, a publishing group offering insight into the world's top tech innovation centers. She is also the author of the upcoming book, Silicon Heartland. Great to see you again, Rebecca. Thanks for joining us.
Yes, thank you very much.
Well, we're not expecting any kind of outcome from the WTO anytime soon, but in the meantime, what is the continuing impact for U.S. and Chinese tech companies that are caught in the middle here, their products, their clients, and the consumers?
Well, there's the issue of the politics, geopolitics, and then there's the issue of the economic interests and business interests. So those are not necessarily going in parallel. Some U.S. companies are about to leave for China and go back into China after being away for 2 or 3 years during COVID. U.S. CEOs are wanting to go back in. And so we're starting to see a little bit more cooperation between the U.S. and China in this business side of things, but certainly not in the geopolitical sphere.
Well, there are U.S. efforts to get allies to shun Chinese tech. We know the Netherlands, Japan on the list. What's the bigger picture here as the Biden administration has been very public about this?
Well, this is part of the competition between the U.S. and China over tech innovation. China rose very rapidly over the past 15 years and has really increased R&D and venture capital spending and has gained a lot in patents. This has put the U.S. on defense, I think, and the U.S. has responded by investing more in its own homegrown technology, such as semiconductors in the Midwest. We're seeing the new $20 billion investment by Intel in Ohio, which I describe in my new book, Silicon Heartland. There's also a lot of new spending going into infrastructure, which the U.S. had fallen behind in. While China was really spending a lot of money on its infrastructure, its bridges, its roads, its airports. And so the U.S. is now really putting a major effort toward its own innovations and its own manufacturing prowess. And this is part of the story of the China and U.S. Competing in many, many important areas, such as AI.
We know that China has also been making efforts on its own to build its homegrown semiconductor industry. Where does that stand right now? How long before it can make a difference in its own situation?
Well, this could be a long time. The U.S. continues to have the advanced technology know-how, and the manufacturing is centered in China. So China is making a concerted effort to advance in chip making and to gain that technological know-how that the U.S. and some other markets have. So this is going to be a long-playing scenario, I think.
And Rebecca, given current political tensions, is there a way forward? Because in the past, it's been business is business, and politics, that's its own separate animal. Or will this continue to stunt parts of the tech industry, especially in these particular sectors?
Well, it could. Look, what is still happening with TikTok in the U.S., that's an ongoing situation. What is going to happen there eventually? Will TikTok spin off and entirely become part of Oracle? Will there be curbs placed on TikTok, which has millions of users in the U.S.? So yeah, I mean, this whole China-U.S. tech issue has spilled over into many technology areas. And today we saw Ford and a Chinese company introduce a joint venture to use Ford's industrial manufacturing know-how, but also to use China's technology know-how in battery making.
Yep.
So these deals are still going on. And it's interesting to see that several Chinese IPOs have come back to the U.S. After a lot of friction there, and I think we're going to see more of these Chinese IPOs in the U.S. in this year.
Yeah, that big Ford deal in Western Michigan. Rebecca Fannin, thank you so much for joining us. We appreciate seeing you as always.
Well, thank you.